Yeah,
Lawrence,
Lawrence. Yeah,
welcome to the show. Or Larry, do you prefer?
yeah. Larry's for friends. Either one works. Thank you very much. Very nice to be with you. I'm a big admirer of yours.
Fantastic. Well, yeah, I've seen some of your commentary, and I thought it was really interesting what you've been saying about what's going on globally in terms of the economics of things and what's going on with currency and money. And as I have seen on your profile, you're also interested in Austrian economics. So I'm definitely keen to chat about that also. Do you want to just tell us a little bit about yourself and your where you're coming from an economic
Yeah.
perspective?
So yeah. So briefly, very briefly, my background. I've always been an investor. I was a venture capital investor for the first and largest part of my career, all the way through 2000. Then I kind of semi-retired and was managing my own money, and then the GFC happened, and I became radicalized for sound money, I like to say, when I saw how much they printed as an Austrian economist. And I thought, uh-oh, this isn't good. We're not, my savings aren't going to take me to 90 plus years old. And so I pivoted and started investing in sound money, the best sound money stocks, which are gold and silver mining stocks at the time. You have to remember, Bitcoin was just getting launched, so that wasn't an alternative at the time. I believed we were going to have massive inflation coming out of 2008. We certainly had a lot, but then they got it under control. And so the best place to be in an inflationary environment before Bitcoin was oil and gas and gold and silver. I didn't understand the oil and gas market. It was tricky, a lot of politics, but I did understand gold and silver gold or silver mining. So I now run a fund that focuses on those. But as I've watched, I bought my first Bitcoin in 2013, skeptical, small position, but over time I've become more and more orange pilled. And Bitcoin's now a meaningful part of what we do. But I haven't given up on the gold and silver because they both have a role. They're different. I think Bitcoin wins longer term, but gold's not going away tomorrow. So.
Fantastic. Okay, so we've just seen all of these big, crazy events happen recently, and so I think maybe it's, I guess, important to situate things because we've been in this environment where people have, up until recently, just treated it like the US dollar is the world reserve currency. US treasuries are risk-free assets, and you can take that to the bank. And now, what's changing?
Well, you know what's changing. I do too. I mean, it's what do they say? There are weeks when decades happen, right? I mean, what happened here in the last 3, 4 weeks is really monumental. I mean, kind of akin to when we went off the gold standard in '71. I mean, so three big things. I think one, it's a small thing, but it actually is a bigger thing. The Canadian truckers protested, and the premier of Canada viewed that he had the right to freeze people's money when they did something that he politically disagreed with. No due process, no courts, no rule of law, nothing. Just I can grab your money. Wow, what an earthquake that is! What an argument for Bitcoin and gold that is. So that was kind of step one. I think step two, followed up by something even bigger, obviously, was Mr. Putin decided to create a war in the Ukraine, and our response to that, which was huge and an illegal war, but very much the same. Our Iraq war was illegal as well. And our response to it was to freeze him out of SWIFT, fine, but also to seize his sovereign reserves that were in our system, which is really, an act of financial war or an act of theft. I mean, kind of a possession is 9/10 sort of thing is a counterpoint to what he did. He did it kinetically, we did it financially, right? And so suddenly the message just got sent to every country in the world that if you have financial reserves in the United States or in the U.S. or Western banking system, and you do something that really pisses them off, they can be frozen. They can be taken away from you. So India saw this, and the Saudis saw it, and Brazil saw. Everybody saw it, and it's huge. And the implications for the dollar are quite obvious, and I think going to be very, very severe over time. And that is that the dollar as a reserve currency is going to be replaced. And even Chairman Powell himself said that there's a chance we might have more than one reserve currency, and I think that's a certainty. We've also seen since that event a lot more talk about people trading in their own currencies for things they want. Just recently we just saw that China was going to use yuan and the Saudis were going to accept yuan to pay for oil. Well, that's an earthquake, right? I mean, part of what's held the dollar together in terms of its relative strength and its overall strength is it was a petrodollar. It was, the Middle Eastern oil producers would only accept the dollar for oil, so there was naturally a bid for the dollar, and that's going to be undermined. So, I mean, these are really, really big things, and I hear people saying, "Well, okay, great. So how come oil's not, or how come gold's not going to 2,500? How come Bitcoin's not at, 100,000 yet?" Well, markets breathe, right? I mean, they did run up quite a bit, and and they're breathing and coming back in, and it wouldn't surprise me at all. I think Dirk Ferguson, Craig Hemke pointed this out last night in his podcast. I was listening to it. It wouldn't surprise me at all if the U.S. government is printing paper oil right now and printing a lot of paper gold right now. They know that we all saw it, and they need to keep these things under control, and they're doing their best. But my view is they're not going to be successful. I mean, oil's come off $30, but oil's not going back to 70, in my opinion. Oil's going to 200 eventually, and gold's going north of 2,000, and Bitcoin's going north of 69,000. So, but markets breathe, right? They go up, they go down, and they were all pretty overbought. So it is
I
what
love
it
that
is.
saying, markets breathe. I think that's an interesting and good way to put it. And I also like your comment there around the paper gold. Now, I know you're a gold man, and obviously a lot of serious gold people have very strong thoughts around the concept of paper gold and using the paper market to suppress, let's say, the physical and the asset itself. So you mentioned there this idea of paper oil also. So could you just, for
Well,
listeners who are unclear how that idea works, could you just explain a little bit
yeah, let me
what's the
talk about it a little
mechanic
bit. I
there?
mean, yeah, years ago, the plunge protection team was set up. Basically, Chairman Greenspan got it going post 1987. If you really read into all the papers very carefully, and they created something called the Exchange Stabilization Fund, which the New York Fed runs. And so the New York Fed has the ability to intervene in markets when they think prices are doing things that are going to disturb the markets or provide, cause damage to the U.S. financial system. And obviously, massively spiking oil prices, massively spiking gold prices. Just as when the bonds collapsed and went no bid in March of 2020, they were in there trying to prevent that from becoming a problem. And ultimately, Jay Powell came over the top with huge. We're going to do whatever it takes. He imitated Draghi. So, I mean, they see all these things, right? They have accounts in the Cayman Islands. They don't have a balance sheet that can be audited, and they can do things that we can't see and we don't know that are happening. So to some extent, none of these markets are truly free markets with absolute price discovery. They're all markets with an overlay of manipulation. And in the gold area, which is what I've been in for so long, and I've done all the studying, and Gata and a lot of other people have done fabulous forensic work. You can just see the footprints everywhere that they have. They know that if gold were to break free and run hard, that they would have a serious problem with the trust and credibility of their currency. I mean, gold is a fire alarm. I mean, just like, and actually Luke Groman coined this phrase, just like Bitcoin is a fire alarm. Bitcoin's probably the only fire alarm that still works. And so, I mean, when Bitcoin went from 5 or 6 thousand up to 50 plus thousand on that last run, boy, you can bet the alarm bells were going off at the ESF, right? And they, there are Bitcoin derivatives, Bitcoin futures, but they're not nearly as large and as suppressive as the gold stuff. I mean, in the gold area, we think that they're between 50 and perhaps as many as 1,000 ounces of paper gold for every 1 ounce of gold that really exists in the world. So they're running, yeah, right. I know your eyes light up, right? They're running a fractional reserve gold system where if everybody said, please give me the gold that, I think I have by contract, there wouldn't be enough, and not at these prices anyway. And so there's a chance for a very high and rapid reset in gold, which is part of what's kept me in gold and not just to go 100% Bitcoin.
Right. And so I think the other aspect that really stuck out to me from what you were saying there was around just this idea of seizing foreign reserves, like just seizing somebody else's assets now. And
Well,
it's like,
that's
yeah.
no, I mean, it's huge. I mean, look, why is the West great? I mean, the West was great because we had a rule of law. Do you know what I mean? It was laws, not men. I mean, it was always somewhat corrupt and there were things wrong, but coming out of World War II, I mean, there was a peaceful system that we set up, and it wasn't perfect. But what I see, the most troubling trend I see is this rule of law breaking down. If we go back to a rule of the jungle, that's not going to be good. I mean, people are going to get hurt. A lot of people are going to get hurt. I mean, imagine if we had a nuclear exchange. I mean, sane people think there's absolutely no, I used to think there's absolutely no way we could ever have a nuclear exchange because of MAD, right? Who would ever think to start something like that? But then I realized that some of these people who are running things, they're psychopaths, right? And I mean, they might actually do something that's stupid. I mean, what's 10, 20, 50 million dead people to them if it's not them? I mean, I'm not suggesting that's going to happen, but frankly, it has become more of a concern given, this whole rule of law thing breaking down. It's a slippery slope. I mean, tit for tat, right? Okay, you seized my foreign reserves, well, therefore I've got the right to do this. Oh, well, you didn't do this. Okay, well, maybe I need to go into the Baltic states. Maybe the Ukraine's not the only place I start. Maybe I go one step further. And then it's just back and forth. And I mean, you see people now in the U.S. calling for a no-fly zone. We do a no-fly zone, we might as well declare World War III. So, and that's to me a very, very dangerous prospect. And all these people at the top, Putin included, ought to step back from the ledge and start trying to figure out a way to talk to each other in a sensible manner and to listen to the other side and what they're, because in some cases the grievances are legitimate. And the only way to solve grievances is to talk them through. But unfortunately, you don't see a lot of that going on right now, and it is concerning, honestly.
And how much of the financial system and the world as we know it how much is it reliant on people being able to trust in property rights, being able to trust in that their wealth is not going to just be arbitrarily seized? And especially in the case of foreign reserves, whose even are they, right? Like, if it's not necessarily the government or it's not necessarily Putin's reserves, if it's relating to like somebody else's assets or some citizen's assets.
Well, that's right. I mean, it's like I say, you get to the rule of the jungle. I mean, if it comes down to who's the strongest, does that mean that the strong are going to have food to eat and the weak are going to die? 'Cause, I mean, it's just, you've got to decide what set of rules you're going to live by. And unfortunately, the trend in this direction, in this area, is not good. I mean, it hasn't completely broken down yet, but it's again, it's a slippery slope. And so, yes, I mean, I think one of the things I think you're going toward is just how bulletproof Bitcoin is. I mean, I love Jason Lowery and all his talks about it. I mean, here you are, you've got a mathematical system that replaces armies because people can't steal your stuff. If you've got the 12 words, they can't steal it. And I think that's one thing a lot of people, a lot of newbies into the Bitcoin space don't understand just how important that is. That ultimately this thing's going to outlast these governments, and that's a thing of beauty. But because I know one of my great concerns when I first got into it is, oh my God, this really threatens fiat currency. The government's going to shut this shit down. I mean, they're not stupid. They're going to figure out a way to shut. And obviously China's tried to do it, and others have. But I don't think they can. And 12 words, and I'm self-sovereign. I love it. And I think that's how all hardcore Bitcoiners feel and should feel. And I think that ultimately time is on our side because we've got a better solution. So having said all of that, gosh, there are going to be a lot of bumps in the next few years, right? I mean, I'm sure you see that. We all see it. It's concerning, right?
And I think for those people who are newer, maybe they're just leaving their coins on a platform or they haven't really thought through their security, their backups, all of these aspects, and using their Bitcoin under more adversarial conditions, let's say. I mean, these are things that everyone has to think about and really think deeply about using it in a more self-sovereign way, because as an example, if you don't, it can be easily seized and taken. Even the Bitcoin can be seized if you are not securing it correctly.
Absolutely. Absolutely. I mean, and there's been a lot written and said about this. I don't want to, because the government's listening, I don't necessarily want to go into, how important that is and what I've done, but I'm just, yeah, not your keys, not your coins, right? And, I mean, I think, didn't we see recently, I think Coinbase was grabbing some Russian accounts. Coinbase and I was very, sad to see that happen. I mean, they're not Bitcoiners. But they were like freezing some of their customers who had Russian ties. And I was like, really? What's that all about? So once again, I mean, as we go towards the rule of the jungle, possession will be 9/10, right? And so, yeah, you want to make sure you got your keys.
And in this environment, we are seeing it almost like an animal threatened can be very, very dangerous. And so, if governments are pushed into a corner, backed into a corner, what kinds of actions could they take? I mean, these are, I guess, questions that
Well,
we're all thinking now.
yeah, no, it's a great question. I mean, so Roosevelt does Executive Order 6102 and he grabs all the gold in 1933, right? I mean, one thing we know about governments is that their job is to perpetuate themselves and they will change the rules. I mean, they will lie, cheat, and steal, and they will break the rules. And the fact that Roosevelt grabbed people's individual property in 1933 and that the Supreme Court backed him up, it's just shocking to me. I mean, my grandfather was just appalled by that, just how bad that was. I mean, that's not what the Constitution says. You can't take people's shit. You know, I mean, and since then there've been just a long list of these things, right? I mean, I was short the financial stocks in September of 2008. They outlawed that. Cost me a huge amount of money. I mean, look at what just happened with nickel, right? Nickel does a GameStop and goes, no offer straight up. Well, the LME changes the rules, cancels a bunch of trades, makes it liquidation only. I mean, they did it at the Hunt brothers in 1980. I mean, one thing I think we all can be sure of, and one thing I think we should not underestimate is the lengths that these governments will go to try to maintain their privilege, so to speak. And this is historically the case as well. I just tweeted it out recently. I reread this weekend Andrew Dixon White's Fiat money inflation in France, which is the Assignat story from post 1789. I mean, they were executing people who had gold and didn't report it. So, it's right. I mean, they were going to the guillotine. So, it's governments can get to be, I'm not suggesting that we're as primitive as that, a couple hundred years later, but I mean, I think it's safe to say that the people in power in governments they're going to take the moves and do the things that they can to try to hang on to the privilege that they have. And so we should assume that some bad things will be coming our way. Having said that, like I said, like we talked about earlier, you can be self-sovereign and we can wait these things out. I mean, ultimately, when the entire fiat currency system collapses, which I believe it will, the only issue is the timing. Ultimately, when it all collapses, a new government will come in, and Suarez, the government or the mayor of Miami, is going to be he's going to be president, right? I mean, we're going to have Bitcoiners running the government, but that's definitely 10 years out or something before that happens. So, in the interim, I think we all owe it to ourselves to be prepared and to not be naive about what these guys can do, because they can do a lot of stuff.
Yeah. And so even on things like predicting the downfall of fiat, I think I'm also wary as well. Obviously, being into Austrian economics, I think there isn't obviously a fundamental issue with fiat money, but at the same time, there are critiques I can appreciate and understand. People might say, look, you Austrians, you're always too bearish, always calling the end of everything. And
Well,
there have been Austrians who've made high inflation calls and unfortunately got them wrong,
oh,
even
I've
during
been one
the
of them. I've
GFC
been dead
times.
ass. Yeah, I've been dead ass. Look, here's the problem. It's really hard to time a once in 100 year event, right? And that's kind of what this is. I mean, we had a smaller version of this in the 1920s and 30s, and the U.S. chose deflation, and Russia and Britain and France chose inflation. But when you get to a sovereign debt crisis, which is kind of what we're in now, it's going to get resolved. It has to. The mathematics are there, so it has to. Now, we can all look like idiots, and I have looked like an idiot in the past, and I've been wrong plenty of times. I mean, I thought in 2008 it was all over. It was so obvious to me that fiat was going to fail that I went and pivoted, put 100% of my fund into silver and gold. It worked great for a few years, and I was really confident, overly confident, obviously, because from 2011 to 2015 they did Operation Twist. They brought in a bunch of paper gold, and they managed to get the gold price back from 1900 back down to 1100. And I watched half my net worth melt away. So what we got to understand is the other side is crafty, and they've got tools and they control the narrative. So anyone who thinks it's going to be an easy fight is mistaken. You got to be ready for a long, hard battle here. But having said that, I think history and math are on our side, and I can't actually imagine that it's going to take more than another 10 years for fiat to be basically dead. I mean, it's, what is it, 2022? Yeah, by 2032, it'll be over by then. I think it'll be over a lot sooner than that. But I don't know the exact timing. Nobody really does, because nobody knows what the other side's moves will be. I mean, look, if they go to full MMT, fiat could be dead in 3 years. I mean, if they start printing money like crazy, which, who knows? I mean, with gasoline at $7, they may have to do. I mean, there's going to be, you're not in the United States right now. I know. I mean, it's the pain here is starting to get pretty significant, right, from gas and food prices, and it's going to be a real issue, right?
Yeah, absolutely. And so, as you're saying, it's the difficulties is that there are so many variables up in the air at the same time. It depends on what one side does, or one person,
Right.
one organization, and then the response from the other. And I'm curious then, if we were to try and game out some of those responses, what would some of the likely responses be? As an example, I think probably central bank digital currencies might be a very likely.
Absolutely. Absolutely, you're very smart to point that out. And I agree. I think that's, they're trying to go there. That's where they want to go. I mean, to get a little more micro and a little more dialed in on the U.S. I mean, I think that Powell's going to probably today, he's going to raise rates. He's signaled 25 bips. I think he might surprise and go higher. Who knows? But they're trying to fight inflation as best they can. I mean, it's a joke, 25 bips against a 7.9% inflation print doesn't really make a difference. But I think eventually, the stock market is going to go down, and then I think we're already starting to see the 10-year bond market, the price of those bonds going down, yield going up. It's broken out into some new high territory we haven't seen since early 2019, and I think that eventually they're going to be forced into yield curve control, where they have to buy the bond market, because the U.S. with 5% interest rates, everybody's bankrupt. It doesn't work. Everyone's so levered that, and it's all based on this, I mean, what they did was just enormously distorting this whole ZIRP, zero interest rate policy. This just distorted the financial system beyond measure, and getting out of it is going to be so hard, if not impossible. And so, I think they'll go to yield curve control, and that when they do that, that means their balance sheet grows more. So that's the ultimate pivot. And the event, people have said to me, well, okay, Larry, you've been saying hyperinflation forever. You've been wrong, admittedly. What's the trigger event? Well, from the books I've read and everything I've studied, the trigger event for hyperinflation is when people realize there's absolutely no way out, and they are going to have to print forever, and they're going to have to print more and more forever. Now, I think 5% of the population, you and me, other people, Austrians, we realize that. But it's got to get to the point where like 30 or 40 or 50% of the population realizes that. And they're like, holy shit, we're in this burning fiat house. Our money is going to get wiped out. Sell all my stocks, sell all my bonds, give me gold, give me Bitcoin. And at that point, those two assets, the prices just go up infinitely against fiat. And there is no demand for fiat, because everyone knows it won't buy you anything, and it'll buy you less in the future. So it's the psychological recognition that creates a tipping point, right? That enough people come to that. There's a law for this. I mean, Gresham's law. You can Google it, right? I mean, there's a guy from 1500s in Britain. It's a good money drives out bad. I mean, people have to realize that the government monetary system is programmed to debase and getting worse consistently and faster. And when that happens, you get a substitution effect. And so, people just dump the money. They don't want the money anymore. They know they'll buy anything. They'll buy toilet paper. They'll buy food. They'll buy houses. I mean, you've seen this already to an extent. I mean, U.S. housing prices are up 20% year on year. I mean, that's the greatest. That's the Hugo Stinnes trade going on right there. I mean, people are saying to themselves, hey, I can buy this asset, and I can use leverage at 3%. I can get a 30-year at what used to be 3%, but now it's 3.8. I can get a 30-year at 3.8, and I got this asset that goes up 20% a year. Give me some of that. That's a no-brainer, right? So it's coming. It's definitely coming. But the issue, with each of these waves, more people figure it out, right? So
I think that's right. And what we're starting to see is some of the personal finance content creators, whether they're on YouTube or TikTok. I've seen some of them now, and very mainstream ones. We're talking guys with over 1 million followers or subscribers, and
Yeah.
he's saying, yeah, I went out and took out this massive loan because otherwise I didn't want to just be, a sitting duck in the burning house of fiat, as you say. And so he's saying, oh yeah, I went out and took out a loan. I didn't really even need it, but I thought, well, the best way is to buy a property. So I bought a property with this loan, as you were saying, because
Yeah.
he can access cheap credit. And
Yeah.
then it will become a real, and again, this is not nice to, I guess, to think about, but really it's going to become a game of haves and have-nots. He who can access very cheap credit will win, and he who cannot will suffer.
That's exactly right, which is just so tragic. I mean, this whole damn thing is so tragic, and but it just look. I didn't create the system. You know, I'm not a central banker, and so my view is seeing it and understanding it. You know, what I've tried to do is just educate people and help them to understand what they can do to protect themselves because. They're, and as tragic as it is, I also want to try and be optimistic because I think Bitcoiners really are optimistic, and that's one of the fabulous things about them is that, Bitcoin does fix this. When we get to the other side of this, things are going to be a lot better. They really are. And in fact, if you study hyperinflations throughout history, of course they're horrible. People get wiped out. People they see their life savings get destroyed. It's horrible. Having said that, when they do reset to a sound currency, things come back really fast. I mean, people are smart. People are industrious. And if we can do it without killing 50 million people like we did in World War II, if we can do it without kinetic war and death, what really happens is just the wealth shifts hands. It goes from the people who had bonds, those bonds are now worthless, to the people who have real assets, and they're much better off relatively, right? So,
Yeah, and so I guess along those lines of what the typical responses in a high inflation environment are, so typically taking out loans because
yeah,
you can borrow you can borrow the bad money to buy something that's going up. And so
right,
I think if you look at other examples, and I've done episodes on the show also, so listeners, you can check some of those out, looking at things like, or examples, let's say Zimbabwe, where in a high inflation environment, we're seeing people take out loans to buy things. We see people, and this is eventually before you get to that final monetary hot potatoes point where people are earning money, and then as soon as they earn that money, they run and buy things in the store
yeah.
because otherwise the value just disappears. Or
Prices
it
going
just
up. Prices going up. Yeah.
yeah. And so in that scenario, I guess part of it is also thinking about what are the likely governmental responses, because eventually at some point, let's say credit markets may tighten up. You may not be able to access cheap credit, or maybe you might
Well,
be
that's
an entrepreneur on the premise of, oh, look, I'll be able to roll that loan over to keep my business running, or I'll be able to keep doing these loans to keep stacking more houses if I'm a property entrepreneur, let's say, trying to be a property mogul or whatever. But then what happens is if credit seizes up and they can't get that next loan,
well, that's
then they're in
right.
trouble.
That's right, and that points to a risk that I would point out of getting too over leveraged. You don't want to get too far out over your skis, right? I mean, if suddenly okay, so you're leveraging properties, you're borrowing to do it, you're renting them out, say for example. Well, what happens when your tenant loses his job because you're in a depression-like set of conditions? So you got to be careful with the Hugo Stennis trade. I mean, you got to make sure you're not going to lose the assets. I mean, I saw it on Bitcoin. Some of the people they're following the Plan B model, and they were absolutely convinced we were going to be at 150,000 by now, and so they levered up their Bitcoin. And then whappo, we had another big drawdown, and we all know it's volatile, and they got blown out. And it's tragic. I think the other thing you can count on as a government response, I was thinking of when you mentioned that, is wage and price controls. I mean, I was around in the 70s. I mean, Gerald Ford put in wage and price controls, and he had we all wore buttons that said "Whip inflation now," and it was kind of stupid, but I mean, and wage and price controls, we all know how that's going to work. Okay, fine. You put in controls, you're not going to get anything. You're going to have shortages. You're going to have black markets. I mean, they had wage and price controls in World War II, and basically they had to go to rationing, of gasoline and butter and other things. So, I mean, the government's going to try lots of different things, but none of them are going to work in a long-term sense. I mean, the solution is for the government to reset right now. But I mean, look at our government. I mean, so half of them are drunk. I mean, you saw that Twitter clip from one of the representatives speaking the other day. I mean, they don't understand what's going on, and they have very little ability, to think through what the correct solution would be, which would be to reset the currency. And That would be the fairest way to get to the other side, but I think that's unlikely. So,
Right, and so they can just keep trying to point the finger and blame somebody else for their own
well,
problems. And
that's
I think
right.
this also points to, I think this is an interesting point, and I'd love for you to touch on this idea, is that we actually need to study economics not just for some kind of theoretical, intellectual hobby, but also to perceive the world in a better light and to understand a little bit more about what's going on. So I'll give you this example of, as I'm sure you're seeing it, and I'm sure listeners are seeing it, is that apparently a bunch of TikTok influencers were given a briefing from the White House on how to basically blame Putin for the gas prices and for inflation.
Wow.
And so this is just an example, but at the same time, if you actually study Austrian economics and you actually try to understand a little bit more about what's going on in the world in a macro sense, from an interest rates point of view, from a monetary point of view, you can actually see through that lie a little bit better, wouldn't you say?
Oh, absolutely. I'm shocked. I was not aware of that fact. That's just so fitting and so, so descriptive of our times, right? I mean, let's give these people online a way to push our false narrative, right? And more recently, we've also seen the false narrative. A couple of different government officials came out. Marty Bent had a great tweet about it. That government spending is not what's creating the inflation problem, which is just a blatant lie and an attempt to gaslight us. I mean, because the government spending increases the deficit. The increased deficit's not funded because we don't have buyers of our bonds. Therefore, the Fed has to fund it. Therefore, the Fed has to print the money. And ultimately, inflation comes down to the excess money. I mean, the reason we're enduring the inflation we're enduring is because the Fed created 46% of the money supply, historical money supply, in under 2 years. I mean, just as a result, in reaction to the COVID thing. So, and while they've slowed that down, I don't think the markets are going to hold together long before they're going to be forced to going back to that. And when that pivot comes, I think that will be a big building block in the earlier argument we were talking about of when everyone realizes they can never stop, right? I mean, the Fed's like, okay, we had COVID. I mean, and it's convenient. I mean, it's annoying to me that this war broke out because it's like, okay, now Putin gets to say that, the Ukrainian dog ate my homework, right? I mean, it's not, it's not my stuff that's inflation. It's not the fact that we're running a $2 or $3 billion or $1 trillion deficit that's creating the inflation and monetizing it. That's not what's creating the inflation. Putin did it, And it's extremely annoying. And, yes, as more and more people become educated, I mean, I think that's key. And I think the other thing I learned from you just now is that I didn't realize some of these more mainstream people are talking about it. I mean, I did get picked up in Barron's this past weekend, and there have been some articles in the Wall Street Journal talking about the dollar losing its reserve currency status. And I will say this, I manage a fund in the gold and silver space. I've never had the amount of outreach from mainstream institutional asset managers that I've seen in the last few weeks. I mean, I think that a light really when this whole thing came down and we sanctioned the Russian reserves and I think a light went off in an awful lot of the money management community. A big part of the money management community said, "Oh my God, this is serious. This inflation issue is serious. It's persistent, and the world is changing, and we can't just assume that keeping score in the dollar makes sense anymore because the dollar is going to be debased. It's already been debased, but and so between there and what we need next, Stephan, is we need the world to realize not only is it going to be debased, but it's going to be debased. It can never stop, and that debasement is accelerating. When those three beliefs become widestream, it's all over. At that point, hyperinflation, because there'll be a rush for the exits. I mean, I did a tweet thread on this. I mean, I think we could wake up some morning and there's no bid in the bond market, and the Fed will be forced to step in and buy those bonds, and maybe they'll do it quietly, surreptitiously, but I suspect some of it will have to be announced. And when that announcement gets made, that's just another building block that says, okay, here we go. They can't stop, right?
So as you were saying, I think a big part of it comes down to government debt being cheap and accessible, and obviously the bond
Right.
market is an important part of that. And so as you were just saying, how you're seeing more money managers reach out to you and talk about
Right.
this in a more of an honest sense, because let's say they can't necessarily benchmark against the US dollar or use that as part of how they index or benchmark their performance, as an example. And
Yeah.
so I think in a similar way, we're seeing a lot of people who just by default, they just do the 60-40 stocks and bonds. But what
Oh
happens
God.
when people wake up and realize, wow, 40% allocation to government bonds that are just guaranteed to go down? How does that change? Do you think we see a change in that behavior, the typical 60-40 stocks and bonds?
I think so. I mean, I think so. I'm not really close to the Susie Orman crowd, kind of the day-to-day people, but I do know some stockbrokers, and I think that, they all, I mean, I think their clients are becoming aware of the fact that something's not right. The bonds, I mean, if you've been in a bond, you've been losing money the last year or so. And for the first time ever, I mean, I think the more interesting thing is actually the stock market, right? I mean, this year is a very instructive year. I mean, the only things that are up this year are natural resources, commodities, oil and gas, and gold stocks. I mean, all the major U.S. stock indices, the Dow, the S&P, the triple Qs, they're all down. And and of course I know what's going on right now. Everyone's buying the dip, because the typical stock investor post 2008, the right answer has always been to buy the dip, right? I have to say, every time it dipped down before, I think, okay, here it is, it's going to go lower. So I was dead ass wrong. But the point is, one of these dips you're not going to want to buy. It's not going to come back. I happen to think this is the one, but I've thought that before and I've been wrong. So I'll caution that, don't follow my advice on stocks. But it's, I mean, one thing's for sure, if we go to a higher interest rate environment, that's going to slow down the economy. And also a higher interest rate environment means that the PE multiples that we're at aren't as justified as they were. And so I think stocks are in trouble. I think bonds are in bigger trouble, but I think stocks are in trouble too. And so, when people start getting their statements and they see their statements getting smaller, they call up and they ask questions, right? Well, why am I in this? Why isn't it working? Well, and I know because I've talked to them, I know what the average financial advisor is saying. Oh, this has happened before. Be calm. You're okay. Da 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 da. We got to buy the dip. We got to hold tight. Don't sell in a panic. And every single time in the past they've been right. I mean, I was advising some people to sell stocks in March of 2020. That was a dead ass wrong move because they brought it back again. And they may bring this one back again. I mean, it's possible when Powell does this pivot, which he'll be forced into doing, and they talk about, I mean, one of the things I think they're going to probably have to do at some point, I think they might actually, they might do yield curve control where they buy the bond market. They might also buy the stock market. I mean, Janet Yellen signaled this a couple of times in the past. I mean, Switzerland's done it, Japan's done it, others have done it. And, it'd be pretty easy to get it. I mean, it's not legally today, the Fed isn't allowed to buy the stock market, but wouldn't it be easy? The stock market's down a lot. Everybody's IRA is hurting. Everyone's clamoring for some, to make it go away, make things get better. And so Congress passes the, protect the U.S. IRA Act. We are now giving the Federal Reserve the authority to buy the stock market. Okay, fair enough. Stock market would go up, no doubt about it. But in turn, what would they buy the stock market with? Money that they printed, right? And so the money would continue to get debased. And I think if they were to take that move, the bond market wouldn't like it at all. So look, they've got a big bubble based on printing money and low-cost money and mispriced money based on ZERP. There's just no, I mean, you can't taper that. You just can't. It's either going to implode or you're going to print like crazy. And by the way, the other reason I think we're closer to the end game is that every time they print, it has to be more, right? Look at the '08 example. From '08 to whatever, 11, 12, 13, they printed $3 trillion. It took them a bunch of years to print $3 trillion, right? This time, I think they printed close to $4 trillion, and they did it in less than 2.5 years. I mean, in fact, they did a lot of it in less. They did a couple trillion, bam, right out of the gate. So and my sense is the next one will be bigger still. I mean, the Fed balance sheet was at 8 now. I mean, my gut is it's going to 15 or 20 on the next one. So it's because, think about it as it's like a balloon. You got to keep putting air in this bubble, or else the thing's going to deflate. That's the analysis that I use as I model it. But when they do each of these things, that's the tough part. We don't know what they'll do when, right?
Absolutely. And so, as you rightly point out, each time they've got to do even more, and each time they've got to print more, bail out more. They just each time is more and more,
Right,
because otherwise the whole
right,
thing comes tumbling down. And this is
exactly,
all a game of how long can they keep the party going? How long can they just keep
exactly.
kicking the
Yeah,
can? And
yeah,
thinking back, and as you were pointing out, that it's almost unjust that they've got the excuse, or they're using COVID as an excuse, let's say, or of other things going on in and around the world. Uh, I wonder how much of the history of some of these big crises really is, it does come down to inflation, and then we're just pointing at something, but really the underlying cause of a lot of that was the monetary mispractice, malfeasance going on.
Well, as you're an Austrian economist, so you know it well. I mean, it's a fat pitch for me to hit. I mean, you know, look, monetary mischief has caused a lot of the problems in the world, and that's why my Twitter handle is "Fix the Money, Fix the World." I mean, if you study it carefully, I think you can see that inflation and credit growth and misguided monetary policy has created enormous problems over the years. I mean, pre 1913, we didn't have a Federal Reserve and gold was money. And, there were problems, there were various crashes, and, companies got into trouble and so on and so forth. But having said that, from 1789 to 1913 was probably the greatest increase in human prosperity in the history of the world ever. And, we did it without a Federal Reserve. We did it without a federal income tax. And, it was when politicians and powerful interests got involved. I mean, remember, the Federal Reserve is not really part of the government. It's a private organization that works for the banks. And so it does what is in the bank's best interest, full stop. So, these things, I mean, it was what was used, it was used to finance the World War One. I mean, they found it in 1913, and they said, oh yeah, we're only going to discount bills at sound credit at high rates of interest, right? 3 years later, they broke that. 3 years, and they broke it, and they printed a lot of money to create World War One, which then led to the bubble that led up to 20, and then led to a bigger bubble that was 29. So, it's bad stuff. It's not, and that's the beauty of Bitcoin, right? The beauty of Bitcoin is, human beings by our very nature, we're all flawed, and everyone will, at the margin, cheat. And math doesn't cheat, right? If you have a formulaic system that we all participate in that you can't cheat or game, that's the best monetary system ever, completely, for sure. It's better than gold. We don't even know how much gold we have. I mean, we claim we have 8,300 tons, but Fort Knox hasn't been audited since the 50s. I mean, I don't think it's there. Ron Paul told me he doesn't think it's there. So, it's a mess. It's a mess. This monetary stuff is a mess, and it's got to get fixed. But fortunately, we'll have a huge. Fortunately or unfortunately, I mean, unfortunately in terms of the pain, we'll have a huge blow up, but fortunately because it'll then lead to it getting fixed, our kids and grandkids won't have to deal with this problem. They'll have some other problem to deal with. I mean, global warming, whatever it might be at the time, but it's not going to be this one.
So, going into this idea that we are moving into a multi-currency world, right? So even Jerome Powell has come out saying the US dollar may not be the only reserve currency. It's implying there's this sort of multi-polar world, or we're seeing, as you said, we're seeing Saudi Arabia looking to sell China oil denominated in yuan, and we've seen, I believe, India looking to boost non-dollar trade with Russia also. So we're starting to see the beginning signs of that. Do you have any thoughts on what a multi-currency world looks like, and obviously where do you see Bitcoin playing into that over that medium term?
Yeah, I don't. There are people who are better at macro than me. I mean, I've always been kind of a stock picker and an investor, and I'm good at analyzing companies. I'm not a macro guy. I mean, I would point people to Luke Gromen, who I think is probably the best macro guy in the world right now. I think that ultimately, what currency gets used. I mean, the thing to keep in mind is that financial transactions can be done very quickly. I mean, even if people, like, for example, Russia was buying oil with dollars, but then the minute they got paid, selling their oils for dollars, but then the minute they got paid in dollars, they turned around and used the dollars to buy gold. They didn't hold the dollars. They got rid of all all their, their dollar bonds and a fair amount of their dollar reserves. I guess they held on to some. They probably needed them to operate. But remember that you can convert into whatever you want. And they're, so currency's got a couple of different roles. One of them is transactions. The other is store of value. And right now the dollar is the most liquid currency, no doubt. It's the reserve currency, but fading. But there will be others. But to me, there'll be all these various currencies, whether it be the rupee or the yuan or the yen or the euro or whatever it might be. There'll be a lot of different currencies. But the one that what really matters to me is not what currency you're paying in, because you can quickly get paid in a currency and swap out. What matters to me is what currency are you saving in? Where do you want to put your reserves? Where do you want to put your excesses, right? Are you comfortable holding dollars? Are you comfortable holding dollar bonds? Are you comfortable holding Chinese bonds? I wouldn't be. But I tell you what I am comfortable holding. I am comfortable holding gold. I am comfortable holding Bitcoin. And I think more and more people will get and are getting comfortable holding Bitcoin. And what they're going to realize is that all of these fiat currencies are getting debased. I mean, this is Brett's dollar milkshake theory, and he's right. I mean, the dollar is still the best of a lot of bad fiat currencies. I don't really care which fiat currency wins. What I think is going to slowly but surely happen is gold and Bitcoin are going to become the savings reserve currency. Transactions might get done in lots of different things. But again, what do you go back to? You got a reserve, what do you go back to? I mean, this is Saylor putting Bitcoin on his balance sheet. I think you'll see gold companies putting gold on their balance sheets. You'll see, saving in the thing that they believe in. You'll see Bitcoin companies putting Bitcoin on their balance sheet. And, it's not, happening as fast as I'd like. And in the Bitcoin case, a lot of people argue against that because of the volatility. They're like, well, I don't want to put something on my balance sheet that goes up and down a lot. Okay, fine. My argument on the Bitcoin volatility is just what we're trying to do is we're trying to put the ocean into a swimming pool, and it's gonna be volatile, right? I mean, and unfortunately, I mean, and I think this is truly unfortunate for Bitcoiners. The Wall Street guys have gotten involved. I mean, if you look at some of these big exchanges like FTX and other guys, and they're offering enormous amounts of leverage. And, and they were former derivative traders. I mean, Caitlin Long has pointed this out. And, so that, and there are derivatives growing up around Bitcoin. I mean, there is paper Bitcoin today, sadly. It's not big. It's not, I don't think it's driving the price at all. But you can, people are writing Bitcoin derivatives. I mean, I think, by the way, when this whole thing collapses, I think one of the things that's going to be important, is to have a new Glass-Steagall, but also to have a banning of derivatives. Because the minute you kind of let people in an unlimited fashion leverage things, what you basically have said is the guy with the most money runs the world. Because when you can use leverage and you've got more than anyone else, it's like playing table stakes poker. You know what table stakes poker is, right? The person is, all you can bet is what's on the table. Well, okay. If you're at the table and you have the biggest balance sheet, you have the biggest pile of chips, you can have a shit hand, and play it out to the end, put everything in, and nobody's able to call you because they don't have the money to call you with. And so this is what derivatives are, right? Derivatives can be used to manipulate and shove the prices of these things around. And by the way, who has the biggest hidden balance sheet in the world? The US Fed and the BIS, right? And so, they've used that to control our world. They've definitely used that. I mean, that's why farmers don't make any money. That's why commodity guys have suffered at the expense of financial guys. But guess what? It's changing. There are cracks in the system. The LSE is on its last legs. I mean, the LSE just said, you know what? We're not playing by the rules anymore. So again, think about everybody who's dealing with the LSE. Wow, they can void my contract? Huh? Do I really want to be trading there? Do I really want to use that organization? Right? Once again, back to 9/10, right? So,
Yeah,
and trust. I mean, all these financial institutions, it's all based on trust. And things are happening which are basically putting a lot of doubt in whether that trust is justified.
So the way I'm seeing it is, I mean, in a fully free market, there is a reason for derivatives to exist. Perhaps it's just that they've become distorted and too much a part of the system in the fiat world. It's that fiat has enabled this sort of Frankenstein monster, of a financial sector to balloon to a level beyond what it would otherwise be if we were living in a fully free market with fully market chosen money.
Maybe. I mean, I think I have to disagree a little bit. I mean, I think that the minute you allow unlimited leverage, you give power to the person with the most money. I think, and that in and of itself is inherently evil. Unless you want the people with the most money to rule the world and control the world and make themselves richer at our expense. Look, I think a futures market should exist. I mean, the futures markets originally got started to allow farmers and to allow producers to hedge, the price. I mean, so they know what they were going to sell their product for, and for buyers to lock in a price of what they were going to buy their product for. I mean, I think futures in connection with legitimate commercial activity should be allowed, but to go beyond that, I think you open a real can of worms that has led to some of the problems. But you may be right. If we go to a sound money system, with fair interest rates, right? I mean, part of the reason why these markets have gotten so big is their carrying costs are zero. I mean, they can borrow from the Fed at 25 basis points. You can carry an enormous position for almost no money. If you had to put up a legitimate margin and pay legitimate interest rates on that margin, then maybe what I've described wouldn't be so prevalent, right?
Yeah, and that's kind of the line of thinking I was going down as well, because it's like
Yeah.
there are, you could say, okay, you're a farmer and you want to sell forward, right? And what is that other than derivatives? But to your
Yeah.
point, is that we would not see them to this level, and to have certain players
Right.
who have the kind of power that they have right now. And here's the other
Exactly.
point. I think that if you make the wrong bet and you lose, you would lose a lot of money. Whereas today, we're living in bailout culture, right? It's government
Right.
bailout culture, and
Exactly.
you can be saved from your irresponsible choices.
Absolutely. And we've seen it over and over again. I mean, LTCM, that blew up Wall Street. They saved them all. They saved all those banks. I mean, they just saved this Chinese billionaire. But we also now learn that JP Morgan held part of his bet. So, Jamie Dimon the LME just helped out Jamie Dimon. No surprise, right? I mean, apparently there were over $1.5 billion of losses at JPM on the nickel bet. So yeah, I mean, the bailout culture, right. I mean, it's a great game. Heads I win, tails you lose. I mean, I've seen Lloyd Blankfein been on Twitter, waxing forth with some opinions on this, that, and the other. I'm kind of like, dude, you know, you should shut up, because you wouldn't even be here if the government hadn't bailed out Goldman Sachs in 2008. I mean, you basically ran a company into bankruptcy, and the government bailed you out. And I'm not really very interested in what you have to say.
I love that point, because it's like we are living in this age of false prophets and false heroes, right? These people become elevated because
Right.
they were simply winners of the fiat casino, as opposed
That's
to
right.
genuinely skilled investors, entrepreneurs, workers, people who are providing some kind of tangible, genuine value for the world or for the economy, for other people. Instead, we are lauding and raising and praising these very uh, unimpressive people.
I completely agree. I mean, I call them the fiat masters. I mean, there are some people who've gotten insanely rich off of this system, and it's sad. It's sad and it's wrong. It's just sad. I mean, as an example, I mean, I used to kind of in my earlier days, I respected Warren Buffett as a value investor, but ultimately he really became kind of a player in the fiat system. And a lot of his things were bailed out, and look, people, and I mean, you said, maybe you don't blame the player, blame the game. I mean, if the game is set up that way, people want to, be successful, they're going to game it, but still doesn't make the game right, you know.
Of course. And I think even another example to what we were just saying as well is you see these billionaires who are very reluctant to criticize China. They're very supportive of human rights abuses, or very silent on human rights abuses, because it's lining their pockets, and they don't want to rock the boat.
Absolutely, yeah. No, don't get me started on all the narrative wars. I mean, I don't even want to go there. I mean, there's so much hypocrisy in the world. It's impossible for sane people to bear it. That's how I look at it. I look at most of what's going out of the mainstream press, and I just kind of assume it's a lie. Somebody's pushing some narrative for some reason. I mean, it's what is it? The Latin cui bono. Who benefits? You got to apply that to all this stuff, right? Yeah.
So, in an age when people can't trust media or the propagandists, what comes next? Is it individual creators? Is it name brand people who people start to trust? I mean, it seems that that's the shift. I mean, even people are looking at, say, Glenn Greenwald's Substack as opposed to some publication that he may have
Absolutely.
written for in the past.
Absolutely. No, I think, look, people crave information. They crave the truth. I mean, I think one of the things that Bitcoin is doing, one of the things that's happening in the world is these big sclerotic organizations are failing. We're getting into a more decentralized thing. And, people know bullshit when they hear it. And that's why there was a great chart that showed, kind of the viewership of Joe Rogan as compared to, all the networks. I mean, Joe's not perfect, but he's crushing it in terms of getting alternative points of view and trying to get honest answers to difficult questions, which you can almost be assured that the mainstream media is not providing. So, yeah, I mean, I think we're heading to, and it's a beautiful thing, right? I mean, the internet started it. It was the Gutenberg's printing press, and then Bitcoin's bringing it to the monetary sphere. But I think what we're heading to is a much more decentralized world where people can pretty quickly realize, are you being honest or aren't you? And people aren't stupid. They're going to follow the honest people and they're going to ignore the bullshit, right? And that's happening. But there's still a lot of people. I mean, it's like taking the pill, right? There's still a lot of people who are trapped in the old matrix. We need to help them get out of there. We need to orange pill them and we need to red pill them. It's frustrating to me when I hear people arguing about what's going on TV, and I'm just like, oh God. I don't even know where to start.
So, taking that idea of handing out the orange pills and helping people, where do you see that we can make the most impact? Where are we going to have the most bang for buck? Are there certain communities we should be prioritizing our message, or are there certain people to try to reach first who are more
Yeah, I
amenable
mean,
to
I
the
think,
idea?
yeah, well, first of all, I think the millennials as a group in general kind of get it. My kids get it. I mean, they know how they're being screwed. They can't afford to buy a house. They're not making any money. Their wages aren't keeping up with inflation. They see these greedy boomers who, want all their benefits and, think the existing system is great. So I think millennials are probably the first, and they're going to be the hero generation in this fourth turning. They're going to fix it. I've dedicated myself to trying to orange pill gold people because I think Bitcoin and gold are somewhat compatible. I mean, I think Bitcoin's superior, but I don't think gold's totally inferior. I mean, the notion that gold is the enemy, I dispute that. I think that fiat's the enemy. We need to drain the fiat system. And people who buy gold, they're buying it for the right reasons. I mean, they're much more aligned with Bitcoiners than most Bitcoiners realize. And so, I gave a speech down at the New Orleans Gold Show, and I think your audience might find it interesting that there were 500 people there, and it was asked. Somebody said, "How many of you hold Bitcoin?" And half the hands went up. So the gold people are coming around, and you know, but you got to remember that boomers hold a lot of the wealth, and boomers, many boomers are afraid of Bitcoin, and when inflation comes, they're going to go to gold first. And to me, gold is like the gateway drug to mainlining Bitcoin. but I think I don't know. I mean, I think look, the whole nation needs to be saved. I think the most important thing we can do as individuals, assuming we want to get this thing going as quickly as possible so that our kids and grandkids enjoy better lives, is to just everybody in our sphere of influence try and spend the time to help them see and understand and educate them that the fundamental problem is at the base layer of money, and that if we solve this problem, things will get much better. And so that's what I've been trying to do. That's why I'm such a loudmouth on Twitter and why I'm active in these audio interviews and everything else. I mean, I'm not doing this for the money. I'm doing it because I want to fix the system. The system's badly broken. I think it's very unfair. So.
Fantastic. I think you put it perfectly just there. So let's wrap it up here. And for listeners who want to find you online, where can they find you?
Yeah, so I have a website, and all my quarterly reports and a lot of information is free there. It's EMA2 Edward Mark Alpha the number 2.com. You can download the PDFs, and then I'm really active on Twitter. As I said, I'm a loudmouth. So on Twitter, I'm at Lawrence Lepard. Just my name spelled out, and you can follow me there. And I would give a shout out to Twitter. I can't believe Twitter is free. I mean, I'm sure you feel the same way. I mean, the amount of information and input and intelligence, if you're careful, I mean, you've got to block the idiots, but that you can get on Twitter is really quite stunning. So those are kind of the two ways to access me, and I try to respond to every DM I get, and I try to respond to comments as much as possible. But I got a day job too, so.
Fantastic. Well, thank you, Lawrence.
Oh, thank you very much. I've really enjoyed it. Obviously, you're doing great stuff and a lot of respect. So.